Okay, guys, I think we're live on YouTube now. Okay, guys. So let's start. Let me get the recording going. Good afternoon, traders. Welcome to this special webinar. I'm glad to see so many of you, but it seems we're getting less people in the room today. Only 6 or 7 here. I hope more on YouTube. So let's go. Today we're doing gold. Let's maybe the timing as well is not so good. Let's go. I'll start from the monthly as usual and give you guys a rundown of what we're looking at. So basically, this is the gold chart. I think most of you have seen the very long-term gold chart, which means it kind of go like this. If you, I don't know how many of you have seen the yearly one. Yeah, it's here. You can see it, right? They had a spike up, they had a downside, they had another spike, and we're pretty much in a down, right? We're making the next correction, and then probably we'll get another spike, right? So somewhere in here, somewhere in here, you're going to expect sideways move before they go back up, and it might be a pretty long one, right? If you realize there was a long sideways flatness there before they go back up. So we're in the middle of it right now. So let's go to the weekly and see what it's doing. And as usual, people may ask, well, how do you know these patterns are going to work, or can you actually use them to forecast? So I think we can actually look at some of the charts we posted, right, in the past, so you can know whether this is possible. So we're looking for this to end this structure, and then we'll be looking for a big move up, right? Watch for the breakout of that structure, right? And I think we pretty much got the breakout. We got an up move, we got one move down, and then breakout. That breakout was out of a pattern that was pretty clear. I think we even managed to forecast that pattern from the bottom here in the daily, so we'll probably take a look at it at the daily, and then we'll see where it goes, right? So if you're following in the daily, I think right on the bottom of the daily here, there was a buy setup, right in this area here, right? The ending diagonal. It's not exactly an ending diagonal, but at that point of time, it did look like an ending diagonal. So it did show you that there's a possibility that this thing is going to come down a little more here and take off. We're going to break this low here and then take off, right? So they did exactly that by break. Oh, sorry. I think that was that was the last chart that I actually had there for the downside, showing you that this down structure is ending. It's going to go down a little more, and then you're looking for that up wave, which actually happened, right? Pretty clear, pretty easy. So you can forecast the charts. You can tell what it's going to do with pretty high accuracy, right? So come back to the charts themselves. What will this do now? So since we can make forecasts in the past, can we make forecasts for what is going to happen with this move? If you look at this move from this point of view, what you have is a big sideways move, right? So we have a move up, we have a move down, we have another move up. I think likely we're going to get another move down, and then we're going to get another move up, right? Pretty easy. Now, this is the simplest pattern you will find if you're doing wave theory. Now, not exactly every time you're going to see the chart behaves this way. But if that, every time we do a forecast, we will do a forecast using the simplest pattern that exists. And then as it gets complicated, we look at each part of it separately. So we did that forecast for the upside. If you're remembering, I don't know if I don't have the post, but most of in my room, if my traders would know, we know this was going to make a correction and we're going to go up. Now we're making a down move. We're looking for a corrective structure here, and we're looking for a downside. See? It's pretty easy, right? So let's go into that part and look at it now. So go to we've made a move to the downside. I think you can all see this. We've made a move up, we've made a move down, we're making corrections. And if you remember in my weekly webinars, I said, watch for this to come down. I think they will come to somewhere around this here. Maybe tag that low, maybe don't tag it. Maybe even break it, because it depends on what pattern it will be. It could be a contracting flat, an expanding flat, a running flat. We don't know what it's going to be. In this case, it could be contracting or expanding, right? a regular flat in terms of this part being a regular flat, but it will be an expanding and the bigger structure going up back like this. So when we break, if and when we break that low or come close to the low, we'll expect an up move that should break this top. Well, if they're making a regular flat, we wouldn't break the low here, but we'll break the top. If they're making a contracting flat, we will not break the low or the top. Or if they're making an expanding one, we'll break the low and the top. And then we'll be looking for this to go down. This will be the big move to the downside. So right now, many of my traders are in the sell. Those who trade gold in my room, they're in the sell. You should be in the sell. If not, you wait for this to make a flag. Look for one trade down. Yulia in the sell, we know that. Yulia is our gold specialist. Yulia is always in selling gold, so she's pretty much in it. She trades gold very much. Yep. So from this point here, we would look for this to come down. By the way, Yulia took the course not so long ago. I think about a year, right? Or so. You probably more than a year in the room, or about a year. And then you're going to watch this go back up, and then you're going to get this move there. So keep your focus on it. This is what we expect to happen. You can take a snapshot. You're going to have these very small recordings to come back to and see whether these charts behave the way we say they're going to behave. For example, if you go right back to the very early ones like New Zealand, right? When we said New Zealand was going to come down, most of you remember that. New Zealand is coming down very nice. It's still going down. Very nice, right? I think quite a lot of them, you can go back and you can look and you can see whether, what you have learned from them, whether they're making sense. Right? The B wave is already complex asset, so that question is already out of way. There's already a big, very complex B wave in there. So come back to gold. This is what we see, right? This is what we were expecting. We did this in 7 minutes, so we don't even need 15 minutes for that. Expect a sell setup, then look for a buy, and then look for another sell. Right? If you're following what we're doing with all the trades, I don't post these charts now, so I wouldn't have them. But if you're following me in the weekly outlook, you would see that that's exactly how we were looking for gold to behave all the time. As a matter of fact, silver is doing perfectly what we wanted it to do. For those of you who were following, silver has a very similar structure, a move down, an impulse up, a move down, a correction here, drop beyond this low, broke the low. I'm expecting it to go back up now, and then I'll expect this to come down. See? Right? It's doing exactly what. So if you were following, you should got at least that sell in the silver, which I closed this morning. Yesterday, sorry, I was in the sell and I closed it yesterday. And now I'm looking to buy it. And then I look to sell it and look for a sell, get rid of the buy and then sell again. So you can see, right? You can forecast it. And if you can forecast it, you can trade it. The only problem is, can you do it? And people who say that the market is random and cannot be forecast, well, you know why. It's like if me saying, well, I don't know. I don't want to hurt anybody's language, but if like me saying Chinese is not a language just because I can't speak it, right? Now, we know it's a language. Doesn't mean, if I can't speak it, doesn't mean it's not possible for anybody to do. So those who tell you it can be done, it's simply they're saying, I can do it, right? We can do it, so we're telling you it's possible. So, okay, guys, I hope this helped you. I hope you're keeping track of these. I'm trying to keep them short so you can keep track of them. You can relook at them and you can help share them, right? Not a lot of people in today. I can take some questions. We have about 6 minutes to 15 minutes. We can take some questions and then we'll go. Questions, not on pairs, because come on, we do the pairs once a week. Let's go questions. If you have any questions that, on patterns and anything like that, probably would help. Use the opportunity. If I can answer them, I will try. So it seems you guys are doing great. Not many questions. Well, help share the link. Make sure everybody gets it. Make sure we get more people in the room. Answer you in Skype. What was the question? I tried to answer everybody in Skype, but if you send me a question in Skype, like, should I buy here or sell here? You're not going to get an answer. Or I will try my best. Not every time I can answer everybody. What do you think will happen to Bitcoin? I just said we're not going to analyze any separate charts because somebody's asking already for a whole lot of different charts. Let's go into, is it always, okay, this is a good question. Is it always 3 and 5 waves or there can be exceptions? It is always 3 and 5 waves, and any exception is a more complex pattern within the 3 and 5 waves. It's never more than 3 and 5, right? If it's more than 3 and 5, it's an extension of one of the waves within the 5 or within the 3. So I got a lot of questions, but maybe I'll join if I join the course. Okay, well, sure, you'll get your questions answered. Should we look for US yen to figure gold? Not. I don't see the connection between the yen and the gold. I just don't see the connection. I don't think Japan produces gold. No, I mean they look similar, gold and Bitcoin. Well, I would not even put the two of them together. Can silver directly drop to around 15.8 without up move because of the Feds? I don't think the Feds are sitting down trying to drop the price of silver. The ABC is always, no, not always an ABC. It could be more complex and more different. It doesn't have to be an ABC every time. At least the girl. And how long have you been using wave analysis? I think this should be about the 4th year. Once I figure out how to do it correctly, it's working amazing, right? Consider, I think you answered that question already. I did send you my charts in Skype. No, if you send me a lot of charts in Skype, I wouldn't be able to answer them. Remember, I have over 600 plus traders who are also sending me charts, and I have priority to answer to them. So, you know, if I start answering everybody who sent me a chart on Skype, I probably wouldn't have time to do anything else. I hope you guys understand that, right? Does the MACD divergence signal the turning point of the chart? Not necessarily. I think that's a misconception everybody has. That MACD means the chart will turn. It could mean a little correction, but not always a turning point. The turning point depends on where the structure is, right? I did send you just 2 words. I like your style and always straight to the point. Thank you. I always try to go there because, you know, there's nothing else I don't like to beat around the bush with people, you know, going around the corners. I'm not hiding anything, so I don't have any reason to go around the corners. Just to measure the momentum. We use it to measure momentum. It also gives you a sign. You see, MACD shows you that there is a pullback coming, right? What it cannot tell you is that pullback a reversal or just a little pullback, or how big that pullback would be. That's not the purpose of the MACD, right? What will tell you that is depends how you read the structure. Tell you which part of the structure you're in right now. That is what will give you a clue of whether you're ending an entire structure or you're just making a smaller correction. Right? So it's still understanding of the structure is paramount. The MACD just gives you a clue that, oh, momentum is dying, you're probably going to get a correction. That's it. That correction could be small, big, reversal, who knows? Right? So you will only know when you understand structure that the structure is ending, and that means, well, you're going to get a big move to the opposite direction. Am I still expecting Punk to go down? Absolutely. And no change in that structure. So why shouldn't I? Like I said, even if they break that top, there is one more move to the downside. So let me just give you, I think I did this already. I'm going to do it pretty fast for you guys, and we'll call it a day so you can understand how this works. So I think if you go back and you look at the one I did on Punk, it's explained very clearly. We made a move down. We are making a move up. This move up, even if it comes and breaks this top, will come back at least one more down before they make an impulse to the upside. So you're pretty much in a big consolidation here, just like this was a big consolidation. This was a smaller consolidation. So if you can see now, these are your impulses. Let me put them in different color. This was an impulse up. That was an impulse up. This was an impulse up. So if you're going to get another impulse up, it's going to be after a big consolidation. So no matter what happens, one more downside is very, very possible. One more downside like that one. If you're looking at a three-wave structure, you're looking at 1, 2, 3. Very likely you're looking at 1, 2, wherever that 2 ends, come back for 3 and they go. Now the 3 may or may not break the low. That depends on what pattern is going to be forming at that point of time. See? So, see how that works. There's still a chance for gold to turn from the trend line and touch the top before it goes down. Might make the correction. I see what you're saying, but I don't see that structure building right now. Yeah, they can go back up, but even if they touch the top, we're still going to be in a B wave, because that wave going up is not an impulsive C wave, if you understand what I'm saying, right? Okay, that's the whole purpose of it, for you guys to learn, right? This is just for those of you who cannot afford the course to get the in-depth knowledge. At least you will get some basic knowledge. And the main purpose of doing this, of coming to do it on a daily basis, is because there are thousands and thousands of traders out there who might not be afford to take a course, to pay for a course, and you shouldn't if if you can't afford to. As a matter of fact, my view is if you don't have capital, you shouldn't be trading in the first place, right? But people still have dreams, and there out there are so many people selling that dream to them that you can get rich with $100, right? It's impossible. You will not be successful in a long term with $100, right? That's just not going to be possible. But at least to prevent them from losing their money, I'll give them on a daily basis a small clue, reminding them what to look for and what not to look for. They might not be very good at doing analysis, but they will at least have an idea what to look for before they take a trade, or at least how to manage their account or how to do different things, right? So if we can share this link so more people can get to look at it, right? There are already 13,000 people on YouTube. Only about 2,000 or 3,000 of them watch it. For whatever reason, I have no idea. They should, I thought all 13,000 of them should look at it. So at least they will have some clue. You can disagree, but at least you'll have some clue of what I see, right? And then compare what you see. And if you get the same thing, then great. So, okay, guys, I'll see all of you. Take care. We're 17 minutes. Thank you. Thank everybody on YouTube for coming.